In this video, I want to talk a little bit about some terms that are used in commercial real estate leases in anticipation of one of our brass classes coming up presented by Debora Field. There are three terms or concepts that you should know when dealing with a commercial lease negotiation. Also apply when you're going to consider investing in a building for yourself or your company. The two main ways that commercial real estate is leased are under a gross lease or gross rent method. In that way, the tenant negotiates a rate based upon the square footage of the property, and there are certain expenses identified for the tenant to maintain, usually the interior of the property. The tenant will have its own insurance for its business and property. The landlord will have its insurance for the building and grounds. The landlord will, under the gross rent system, take care of snow removal and maintenance on the building itself, HVAC, pay taxes and insurance. Then usually not always, but usually the tenant will then have a CAM, a common area maintenance fee. This is when there are multiple tenants in the property. The landlord will estimate expenses, and each lease will carry a base CAM charge or base CAM amount that will be used each year to see whether or not those expenses for maintenance and insurance and taxes were more or less than that number, because that number is what the tenant is agreeing to be responsible for, that is included in the lease. So if there is an amount that is more than that, that is the actual expense spent by the landlord for modifications to the property, repairs, insurance, taxes, then the tenant will pay their pro rata share of the additional amount of the expenses over their base rate, and those are the CAM charges for that next year. Now, another type of lease is the triple net lease, or sometimes net. This is looking at it from the owner, the landlord's standpoint. They are shifting the costs to the tenant in a triple net lease situation, such that the tenant is going to pay their amount per square foot, which is their base rent. They are also going to pay directly the taxes on the property, insurance for the building, in addition to their own insurance for their company. And the tenant will also be paying all the repairs for the building itself. So that is important to know when you are negotiating your lease, your base lease amount, because all of these other items are going to be coming out of your pocket in addition. So it's called triple net because those are three items that the landlord might otherwise be responsible to pay, and the landlord would be paying for those out of the tenant's rent. So the landlord would have to collect the money on a monthly basis from the tenant, save it up, and then go and pay these expenses. So with the triple net, the landlord is receiving the rent money net of those three types of expenses. Status of a lease as triple net is likely to be a longer term than a gross rent lease. Also, the cap rate on the property is going to be less because the lease is for a longer period of time, and the landlord is going to check out that tenant before they sign on to this longer term lease, and they're going to make sure that the tenant is not likely to file bankruptcy or default. So the longer the tenant is there, the lower the cap rate will be, and the cap rate is the capitalization rate, and that is the amount of return on the investment based upon the tenant paying the taxes, paying the insurance, paying the maintenance, and paying the rent. So it's a good facility or investment for an investor to buy the property where a triple net lease is already in place. And those are usually $2 million and under, and the transactions are in cash. So the investor would be taking their money, buying the building, and immediately receiving a return on that money, again, net of the other expenses because the tenant is paying those. So I hope that this is helpful to you in preparing you for both the 504 discussion and presentation by Brett Larson and Patty Brem, who want you to have as much background as you can coming in so that your questions can be answered and you can get the most out of the presentation. So thank you for watching, and if these videos are helpful to you, please subscribe, because we are not always adding all of these to the website and we want you to have the latest information. So stay tuned, and thank you for watching.